Have you heard about the stock market dead cat bounce? No, not you, my girl. You're okay. Is this a real rebound or are we in for more bloodshed? Stay tuned, because me and this girl are going to tell you what's going on with this latest market crash. What's that? What we forgot is better than whatever they remember?
Don't ask them, what do we know? What I forgot is better than whatever they remember.
All right, fam, let's check it out. Market is bleeding, maybe recovering, maybe something. First of all, Coinbase is under 200. It dipped briefly to 166. Honestly, I didn't even notice it. When market's bleeding like this, I tend to just, tune it out. That's what I does. Oh, what are we covering? Utilities. Who cares about utilities? Let's go. All right. So this is the 1 week performance of the stock market. But today, boom, like green across the board, a big bounce. Now, there is two concepts that I want to introduce you to if you're not familiar when it comes to investing. One is called catching the falling knife. That means that you think it's bottomed out and you buy it and it keeps going down. So you just get more blood on yourself. A second one is a dead cat bounce, which means that the market goes down and then it looks like it's bouncing back up, but then it dies some more. So we could be in for either catching a falling knife, a dead cat bounce, or actual V-shaped recovery. Let's go Visa. Which is it? Nobody knows. Overall, it is normal to expect pullbacks, 20-30% every couple of years. Generally, market goes up when there's turmoils in the market. The government steps in and pumps back everybody's bags with printing money. The Fed is purchasing $46 billion of bonds back, which injects liquidity into the market each month. And then there is talks of a rate cut coming sooner or being larger than expected, given the uncertainty and the volatility in the market. So let's just take a look at Coinbase. Coinbase reported, if you saw the Q2 report that I published and posted the video, check it out if you haven't. They did okay, as expected, very much in line with my forecast, but it did dip afterwards, especially with the broader sell-off because crypto got nuked. All seems to have started with Japan. You send your wife to Japan one time and she crashes the market. One person gets this joke, but this is for you. What are we doing? I'm doing nothing. Why do anything? I like to sit on my hands when there is panic in the markets. If I have some extra cash lying around, I look for opportunities. I have preset target prices. Sometimes I'll put a limit order to buy or sell, and then I don't have to think about it. Just a couple of days before everything crashed, I published a video on crypto, which coins to buy if there is a market crash, and a day or two later, market crash. So you had my price targets. Should you had entered it, you probably even got better prices. Things have bounced back since. Let's check out the crypto markets. Back to 2 trillion. This is, it lost $500 billion in about a week. Bitcoin down 13% in 7 days. Ethereum got nuked pretty hard. Solana 17%. So, the top 3 dogs are doing okay. Ethereum's actually doing the worst, which is, ouch. Feels like this, man. It's fine. It's fine. And it always is. If you've been in the market as long as I have, you've seen many flash crashes, panic crashes, and actual crashes. 2020 was the biggest crash for me. In crypto, 2018, 2017 was a big crash, 2020. And this is a small correction relatively. This is a 35% pullback to be expected. Now, if you were going to buy crypto anyways, this is a much better time to buy than a week ago because you're getting things at a huge discount. And there's quality projects when everything gets nuked across the board almost indiscriminately, that's when you can see things bounce back that actually have value versus things that don't. When people are forced to question, like, why did I buy this again? Why am I holding this? They don't even understand the fundamentals of the project or the value why they bought it. They might have bought it just because they got hyped by somebody. They will dump it. If you understand that Lido secures most of Ethereum and they produce cash flows, then maybe this is a project that has more value than something random like whatever this is. Honestly, I don't know what everything is. Things change. Ethereum name service, ENS. Maybe you think unstoppable domains is powerful. Maybe you don't. Surprisingly, Zcash, which was one of the coins that I touched upon, hardly moved in the last 7 days, really holding well. I think this is partially because on Coinbase, you cannot market sell this. You have to sell limit order. And if you put in a limit order and nobody's buying, then, or nobody's selling a limit order, you're not going to get it. This is today's market performance. It's still early in the day, still about an hour and a half before the market closes. When there's blood in the streets, it's time to make some moves, perhaps. Buying quality. Now, I keep a what to buy in a crash, something like Top Conviction. I've had this since 2020 after discussing it with a buddy, creating a portfolio of top conviction companies. Here, Meta is recovering back to over 500. Coinbase, of course, Google, Amazon, Salesforce, Elastic, Teams, Twilio, Square, Shop, Datadog, Mercado Libre, MongoDB, HubSpot, Square, Trade Desk. So back in 2022, these were my top conviction companies that I would have bought during a crash. That portfolio is up 80% since I created it. Now, that doesn't mean that these are foolproof company. Actually, some of these have fallen out of favor, in my opinion, in my book. But creating something like this is, let's see, buy in a crash. Let's see, what are we saying we should buy in a crash? Pretty much across the board, same stuff, more or less. So, was this a crash? Not really. Year to date performance, companies are still up. Okay, so year to date, market is still overwhelmingly up. Nvidia is still up 115% year to date. Microsoft 7, Apple 8, Google 14, Meta 41%. Let's take a look at the world. China, not doing hot. Japan started nuking all of this, but has recovered as far as I can tell. Taiwan Semiconductor, TSM. I might have misspelled the ticker symbol on my blog. Let's fix that. ASML, doing pretty good. This was listed as one of my top AI stock picks because they are a monopoly. What is happening in the world that's making everything crash? The answer is, the reason everything is crashing is the jobs report. No, wait, it's the yen carry unwind. No, wait, I don't know. There's many things that could be happening right now. Seems to have started with Warren Buffett selling 50% of his Apple shares. And then people were like, he knows something I don't, I should sell too. And that could be it. Could be that the yen carry trade was being unwound. What's been happening in Japan, they had 0% interest rates because they have very low inflation and they're trying to actually create some inflation. So the Japanese people can borrow for 0% and then invest that into something safe like money market fund or treasuries in United States, giving them 5 point something percent. So borrow for 0, get 5%. Awesome. Plus, if the dollar gets stronger versus the yen, even better, because you borrowed in yen, you traded it for dollars, and you're getting 5%. So you're getting the 5% plus the exchange rate benefits from the dollar getting stronger. Because Japan started raising interest rates quarter of a percent, this created incentives to unwind that trade, to sell whatever US assets were purchased and give back the loan. I know quarter of a percent doesn't sound like a lot, but when you're highly leveraged, that can be a lot. So a bit of a meltdown in Japan. Also, in China, they're not doing so hot. They need to stimulate, but they cannot stimulate because the dollar is too strong, and stimulating would only make the dollar stronger, which would not be desirable for the Chinese economy. So the dollar needs to weaken. The Chinese need to print more money to stimulate their economy. And then there is just overall recession fears, and could be unfounded, but also unemployment report was not looking great. So there's many things that pundits try to attribute to why this is happening. Market doesn't always just go up, right? If it was all green day like today, let's take a look at it again. Nobody complains when it's an all green day, right? Only when it's a red day. A red day. Oh, look at that. Everything is green today. Nobody's trying to explain why everything is green today, right? It's just a bounce back. But when it's red, it's like, oh, this is the reason. This was bad. Interest rates, Powell spoke. Yes, those things can contribute or be dominoes, or first domino that falls, but it's hard to tell why or what. A lot of it is human emotion, fear. There's also systemic automated trades. When something bad happens in Japan, perhaps there's algorithms that take that into account and reduce the risk on different positions. So this can have a cascade domino effect. Nobody knows. What I do know is timing the market is impossible, or at least very difficult. Time in the market will outperform. So if you sold yesterday during the bloodbath, well, guess what? You just lost out on all these returns today. So then if you buy back today, you're paying more for the thing you could have bought yesterday when it was lower. It's really hard to tell why, when, what. So it's best to dollar cost average, hold for the long term. If you're a short-term investor, then you are trading and do what you do. If you're a long-term investor, look for bloody days as an opportunity to purchase whatever you have high conviction in at a lower price. Like I showed you, I have about 20 companies that I keep on a list that when there's a bloodbath, I refer to the list and I say, hey, I thought these are solid companies prior to this bloodbath. I would have bought them at those prices, but I was saying to myself, I'll be happy to buy them when they're cheaper for whatever reason. When everything is selling across the board together, that is irrational. Facebook just reported, Meta just reported earnings that were amazing. Stock went up, and then the market selling off, maybe the company shouldn't also sell off. It is reasonable to say, hey, if we're a global recession, there'll be less advertising, but all things being equal, not every company is going to be hurt by whatever's happening in the world. So it is irrational for everything to sell. Same with crypto. If one company is selling all of their crypto, about 500 billion, and causing the market to crater, perhaps they have mostly Ethereum, so that's what's being hurt the most. And then everything else is a correlated asset within the industry. When Bitcoin, Ethereum, and Solana nuke, everything else nukes too. But some things are not correlated and shouldn't be. Anywho, I get real comfortable with this concept. It's fine. When everything's burning, if you can remain calm, keep zen, it will be fine. If you have piles of cash you've been sitting on, perhaps start deploying dollar cost average. Do not deploy all at once, please. You cannot time the market. Perhaps it will be a V-shaped recovery, but often there's falling knives and dead cat bounces, and Kitty, tell him about the dead cat bounce. Not to be trusted. For me, when I have the biggest pain, that's usually the bottom. And I'm not feeling the pain as much, or I've just become numb to it because I've experienced it so much. Stay calm. Don't be emotional. Make decisions in times of calm for the times of volatility. Whether it is when prices go up in a irrational exuberance, have a price target to sell, but also have a price target to buy in case of an irrational sell-off. Don't be a fool. Stay cool-headed. Dollar cost average. Thank you for tuning in. Make sure to like and subscribe if you find value in my content. It really helps out the channel. And as always, may the force of compound interest be with you. Peace.
Peace.